Hello everyone, a very good morning, good afternoon and good evening to all of the viewers from around the world. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at one interesting indicator. I had explained to you the uses, the properties, the concept of the indicator named percent Bollinger Band in the last session. This session, we are taking a step further. We are looking at further modification of the same indicator. So this time around, the name is percent Bollinger Bands Extended. And as from the name, you can guess that this indicator will give you some extended parameters to play around with. You can tinker with these additional parameters and try to come up with a strategy, try to come up with a formation, a setup which is likely to give you higher probability of making money than losing money. So let us now head to the JForex 4 platform, the newly released trading platform from the Dukascopy Bank SA. This is the USD JPY chart drawn on the hourly candle period. The each candle period has been defined for the hourly time frame, which I will change to. Sorry, it is 10 minutes. I will change it to hourly. It's taking some time to respond. All right, here we go. I am opting for hourly candle period just to keep things simple so that I can easily explain the various concepts. And here we find the percent Bollinger Band. Simply do a quick search, type in percent, and all those indicators which have percent in their name will appear. And for us, this session is dedicated to this indicator, the percent Bollinger Bands with the extended parameters. And it is going to look as of now exactly the same as percent Bollinger Band. There is not going to be much of a difference, but pardon me, I have some intermittent cough. It will probably go away in next couple of days. Now coming back to the indicator, if you want to work with the USD JPY, the USD JPY you can use, or if you feel like you can also change the instrument, and this indicator is going to work fine, just fine with any instrument. You can go for forex, you can even look for commodities, stocks, the indices, and other any instrument of your choice, as long as it is available on these platform. So you can work with these all in instruments to look for profitable trading opportunities using this indicator. Now we are just taking a look on US 30, the Dow Jones Industrial Average. Now I will revert back to USD JPY, or we can even go back to using the Euro USD, which is most widely used currency in the forex market. Oh, in last hour, the Euro USD seems to have jumped to the day's high, and it is now trading closer to 0.975. Now coming back to the uses of this indicator, the classical interpretation is kind of simple. I had explained to you its concept, which is also kind of simple. It simply takes into consideration the moving average for a given calculation period, 20 in this case, and then we apply standard deviation, usually of 2 on both the sides, the upside and the downside, to arrive at a Bollinger Band. And in this derivative version of the Bollinger Band, we see where is the last hour's closing price is happening, the current hour's closing price is happening, and if it is above the upper band, then we will have the output of percent Bollinger Band above 100, and if we have the closing value of the current hourly candle below these percent Bollinger Band's lower band, then we will have the output below 0 in negative territory. And if it is in between these Bollinger Bands, then we have the output of the percent Bollinger Band within 0 on the lower side and 100 on the upper side, and whenever there is a cross of the price action from one side to another of the middle band, then we have these output value also shifting sides from one side to another. So that's how this derivative of the Bollinger Band is used. Now it's a concept and it's also classical interpretation, as I explained to you in the last session. I hope you are well familiar with. Now, for this session, we mainly concern ourselves with additional parameters which we are getting to customize this indicator further so that we can go for the setup in a most optimum way so that we can try to look for the opportunities in such a way that our risk reward ratio is in our favor. We should not be losing too much money in case we happen to be on the wrong side of the trade, and we should be making a lot of money if we happen to be right about the trade. Now coming to the input editing options, the applied price can be any of the price. We get the option to choose these various applied prices. You can go for close price, open price, high price, low price, median price, typical price, weighted close price. So depending on what kind of applied price you are opting for, you will have the difference in this output value of the indicator, the high price. Now this output is derived using high price as the applied price. So whenever the high price of the underlying instrument euro USD in this case crosses above the upper band of the Bollinger Band, we will have the output of this indicator also crossing above the 100. If we go for low price, then we will have this indicator drawn a bit differently. So depending on what kind of applied price you are opting for, you will have slight variation in the output value. But majorly the trend is going to be on the same side, but only it is a matter of time. Some type of applied price will give you faster changes will be reflected. Some applied prices will have lag. So that's the only difference. It's a matter of time, as I said. Now I will revert it back to the close price. The time period calculation of the indicator is largely dependent on what kind of time period you are using for the calculation. If you are going for lower time frame calculation, then whatever is the volatility in near term, it will be reflected in the output. But if you are going for larger time frame calculation period, then the recent volatility won't be having that much of an impact. So that is the trade-off between these two different types of calculation period to be used for finding the optimum formation using this indicator. Standard deviation on the upside and on the downside can be drawn differently for this indicator. So this is a major change compared to the percent Bollinger Band. In the case of percent Bollinger Band extended indicator, we get this additional option where we can specify this standard deviation differently for both the sides. You can go for one standard deviation on the upside and two standard deviation on the downside. So you will have the output varying significantly as you have opted for two different types of standard deviation on the both sides. So depending on that, we will have this indicator drawn differently. Now here also, if we reduce it to 1, you will see the volatility is going to cast an impact immediately whenever there are sharp moves. Those moves will be reflected in the output of this indicator with the output reaching extreme ends on both the sides quite frequently when we are using lower standard deviation on both the sides. So this is one major change. Now I will revert it back to default parameters. Another major thing is the type of moving average we can choose for finding the Bollinger Band's output value. We can go for all these different types of moving averages, the SMA, the EMA, the WMA, all the moving averages which we have already seen in earlier sessions one by one can be utilized to define this indicator, and this is one important distinction between the percent Bollinger Band extended parameter and simple percent Bollinger Band indicator. Okay, now SMA, pay attention to the type of output values we get when we are using different types of moving averages. So depending on which kind of moving average you are using, you will have a lot of different moving average is going to determine the kind of output you get for this indicator, the Bollinger Band. All right, EMA, SMA, WMA, T3. When we use T3, we will have a lot more smoothing in the output of this indicator. But the major trend is going to be same. The only difference is in this case also it's matter of time for indicator to catch up on different types of moving averages. Now I will revert it back to EMA. EMA is the default parameter. Output can be color coded. You can go for different types of color combination for defining the trend up and trend down. You can also go for different types of styling factors. You can increase or decrease the weight. You can even play around with the transparency factor. Levels can also be defined. You can also remove or add any other level which you feel is likely to prove helpful. So all these options are there. If you want to make these levels more prominent, you can opt for brighter colors. If you want to go for different color combination, that is always available to you. Okay, now coming to the advanced editing option, if you want the output of this indicator to remain constant throughout the current candle period, then you have to opt in for this option. So this output value will remain locked for throughout the current candle period. Whenever new candle is drawn, that time it will be defined and that value will remain constant throughout the current candle period. Else it will keep fluctuating dependent on the value of the applied price which is there and there for that moment. Highlight the time period zone. If you want to highlight the time period zone, then you have to opt in for this, and whatever is your calculation period it will be highlighted, 20 in this case. If you want to customize the calculation further, you can go for customization of the instrument of the candle period or of the spread side. So you can use it from the chart or you can define it yourself. Same applies for the candle period. You can use it from the chart. So whatever is the chart's candle period, the indicator will be calculated for the same candle period. But if you want the indicator to be calculated separately apart from the candle period of the chart, then you can do that as well. Now here the chart is of the hourly time frame, but the indicator is going to be calculated using half an hour as the candle period for each of the candles under consideration for the calculation. So only last 10 hours worth of data is being used for calculation as we are using 20 candles of half an hour each. All right. Side, the spread side is also going to make some difference, though only slightly. as output value is going to vary, but not much. In principle, it is going to be on the same side. If you want the indicator to be available on all the candle periods whenever you use different time frames for the indicator for the instrument, you can opt in for this option. But if you opt out of that option, then you have to specify on which candle periods the indicator should be available, and only on those time frames the indicator will appear. So here we have 4 hours as the defined candle period for the indicator to appear. So only on 4 hours it will appear. All right, as we can go for these other options also, 30 minutes, 4 hourly, 5 minutes, and only on those time frames this indicator will be plotted. But if I change it to say hourly, then there is no going to be any indicator plotting. The percent Bollinger Band extended parameter indicator is now missing on our hourly time frame, but half an hourly it will appear back again. 15 minute it will vanish again. On 5 minutes it will appear again. So that's how this system is going to work of customizing the indicator. Now I am going to again opt in for this indicator to be shown on all the candle periods. Base period can be none, hourly, 4 hours, daily. So that usually is not going to make much of a difference. As you can notice from the chart, the plotting of the indicator, even when I am wearing this base period. All right. So that's it from my side for today's session of these JForex indicators explained, where we saw the concept uses of the indicator, percent Bollinger Bands, extended parameter. Now, for this session, I am signing off. For further coverage of the market development, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too for trying out this newly released trading platform. The link has been included in the bio, so give it a try and let me know how it works out for you. So thank you all for joining in. I will be back tomorrow with a new indicator, new setup, new explanation. Everything will be new. Do come back. Thank you all for joining in. See you tomorrow. Goodbye.